Hey, everybody, good afternoon, good evening, good morning, wherever you are. Welcome to 12 Minute Trading. My name is Doc Severson. Today is Monday, the 5th of January. Good afternoon, and welcome to the Santa Claus rally, apparently. Slightly delayed, but it is here nonetheless. Glad that you guys are able to join us today. Dave, what are you seeing out in the markets?
Well, first off, it's nice to be back. We took a week off last week and everything, so great to be back with everybody. The We're seeing what we've kind of expected, right? Didn't get the Santa Claus rally, but didn't really get a major sell-off at all. You just had some profit taking through the end of the year, probably some tax loss harvesting and stuff like that. Markets kind of just went sideways, and basically where we're at now, as we've been talking about, we are back to a just about a fully charged daily chart, and we got a weekly chart that is starting to run higher. We still are in this kind of sideways chop we've been in for a little over a week now, but I think by the end of this week that is going to break out. I think we're going to break out to the upside. I think this weekly chart is taking us there, and I think that's just as we've said, that's going to lead us into the beginning of this year, and then once the weekly chart's exhausted from that energy, we are going to see the potential for corrective action, that sort of thing. But right now, I think we're headed towards 7,000 in a hurry. May even see that in the next few days. Certainly next week, I think.
Dave, what's your read on the whole Venezuela situation? Market obviously just sort of yawned and opened up, last night, and it just didn't seem to care. But how do you see this affecting the energy situation or anything else from a
Well, you look at
geopolitical?
the yeah, if you look at the chevrons of the world and stuff, they're up today because they're going to make a lot of money. But the I think people get this isn't all this wasn't all of the above play. Like there's people like, oh, this was just about oil, or this was just about X or Y or Z. But you have to understand, this is like Venezuela has more oil than the Middle East. Venezuela is the most, like, has the most oil in the world. Like 20% of the reserves of the world, I think, are in Venezuela, and they're not pumping anything, right? So it is about oil, but it's also about China and Russia and all of that, because China and these other countries get their oil from Venezuela. In fact, there was a Chinese delegation on the ground in Venezuela meeting with Maduro the day before we got him, right? So this is a real big power play by Trump in a lot of ways to basically reset the world and how things are going to play on especially this hemisphere. So somewhat Monroe Doctrine, if you're a history buff, it comes into play, but it's very much about us owning the Western Hemisphere. It's about us being able to. We now control between the U.S. and Venezuela like 60% of the oil. Like you're a power player, right? So it's reasserting that power across the board and really setting the baseline for who's in charge. So like there's that piece of it. There's this also is a blow to Marxism and communism and all of that. I mean, the guy was illegitimate. The Biden administration had indicted him and his wife. The indictments that were used to go do this were the ones done in the Biden administration. So this isn't just one administration or the other, but it was, Trump that's taken this action and done this, right? So it's um it's going to be really interesting to see how it unfolds because I was working out yesterday when he was, or on Saturday when he was doing his press conference, just listening to it, and to have him come out and say we're going to run it, I went whoa. So what does that really mean? Does it mean that they're a proxy state of the U.S., or does it mean that hey, we're going to manage it and ensure that whoever does take over is favorable in the way that we want, right? So I don't know what that looks like yet. So there may be some things that come out with that, and it's not over. There's the cartels that Maduro was the head of, the generals that were there, that were underneath him run those cartels. So there's still other players and all that type of stuff to root out, take care of, and everything else. But cut the head off the snake and reset kind of the baseline for how the world's going to operate, especially from this hemisphere, in about what, an hour? It's not too bad for a weekend, I guess. So there's a lot of ramifications, but it's a lot more than just oil. It's politics, it's oil, it's United States' place in the world. There's a lot of things that this is an impact. This will be definitely one of those things you look back, 100 years from now, it'll be a big historical thing in history books. So yeah, so that's where we're at. So market likes it because it was over and done. We're not boots on the ground. We don't have any of that stuff going on. And now looks like we've got the the oil side of it, in play for us.
Yeah, fairly strong day today.
Yeah.
I'm going to switch over to the S&P and kind of refer to what you were talking about earlier. So the monthly chart, we've had this monthly swing in place since April. And now it's quite clear that we have basically gone sideways since the October timeframe. And that has turned into a big weekly consolidation as well, too, which is what built this energy up, which is what we were banging on the table saying, hey, we're sitting on a big move here. And so the other good news is that the monthly chart is starting to come out of exhaustion. And as these candles drop off the back here from not only April, but May and June, we're going to be left with a relatively high energy level. So unless the market rips right now, if it just kind of grinds slowly higher like that, this will be in the condition where as we get into the end of the first quarter in 2026, we might be ready for that almighty rip that we've sort of been, I don't know if you'd say waiting for, sort of expecting. We're not exactly breaking out today. We're just taking this pullback. This is, you can see kind of an ascending triangle formation where each low is getting higher. Each of these is a higher low, and eventually this builds up so much pressure that it breaks. Now, if you want to play the Machiavellian angle to this, like what would have to happen to hurt the greatest amount of people? What would cause that would be an actual pullback from this right when everybody's anticipating a breakout to pull back. But I believe any pullback that we see at this point, especially if it's a deep one, will cause a snapback. And this is what's going to create that next swing rally on the weekly chart. So watch for this to break out. If it's unable to break out, if it drops, that is just going to make the snapback even more vicious when it does happen.
Yeah, the key on that's you have a squeeze on the daily chart Bollinger Bands. And that's I think your key to watch, because that's your levels. And this thing's getting tighter and tighter for daily chart. And so we're right at, I mean, basically we're close. But the last high about on the cash index, about 69.45-ish or so, that's right at the top of it. So if you go through that and start busting out, that Bollinger Band's going to widen, and that thing's going to really go popping out of there. And you've got maybe another day of energy charge before it's ready to go. So that's why I said I think this week we'll know.
I'm going to see if I can find any of these. I spent a lot of time years ago doing the John Carter squeeze thing.
Mm-hmm.
Yeah, let's see if I can find it here. I don't know where these are hiding. Well, anyway, we'll find it at some point here. But yeah, this is the Bollinger Band squeeze of what Dave's talking about, is when the Bollinger Bands, the actual standard deviations for the price movement, go in closer and closer together. And it's just like squeezing like an orange pit. It'll come flying out of here in one direction or another. So while we're here, hey, by the way, guys, if there's any questions, anything that you guys want us to take a look at, any stocks, tickers, or anything like that, please let us know. Right now, what we're not seeing any kind of character that implies that we're sitting on the very top of a bear market or some type of nasty correction. We could see a downward move from here, like I talked about, right? If it's unable to break out to the upside, eventually what's going to happen is it will have to move somewhere. and that would cause that. But I think any kind of downward move, especially a rapid downward move, is just going to set the hook for a bear trap to the upside. We are just not seeing the type of price action that implies that a bear is sitting around the corner.
Well, and the question is like, what would that catalyst be, right? So, what could that catalyst be to go to the downside? It's got to be. It would be something not priced in. It'd be like, oh, all of a sudden it does come out that hey, we're going troops all in, and we're getting into a land war in Asia, no, in Venezuela. So, anybody catch that reference, Princess Bride? So, yeah. So I think that would be like something like that. But the only other thing is like this week we do have some economic events. I think jobs, this print's going to be a little weird because part of it's coming in from the government was shut down. So there's a little bit of a, kind of like what's this going to look like type thing. So I don't know if we can, markets will trade off of it, but I don't know if we can bank on what this jobs number will be. So that's something to watch. Fed hasn't come into play yet, but I have heard that we're going to get the announcement of who the next Fed chairman is going to be in this month. So that will move markets, probably to the positive side because whoever it is going to be a dove. So
yeah, I was going to say, it's going to come out. There's going to be a set of wings on them.
Yeah, exactly. So, to me, I think a lot of things point just to the positive side for now. And I think you're right. Like any little bit of move down will be, I think, bought up. I think it'll be, by the dip. It will be full in force.
It will be inconceivable. There you go. Let's
references.
Yeah, but, I'm going to look out at the NASDAQ here for a second and see what the NASDAQ's doing. And the NASDAQ is even worse right now. So this is getting closer and closer to the apex of this triangle. Mm-hmm. And typically when you get into the apex of a triangle and we're starting to see, you're just seeing the MACDs just, there's nothing left anymore. Range contraction like this leads to range expansion. So watch for the fake out move. The fake out move could either come initially to the downside and resolves up, or we could see a move that tries to break out, fails, and then drops. Ultimately, I think we are heading higher down the road, irrespective of what happens in the short term.
Now, the other thing that's happening today that I think is worth noting is cryptos. Cryptos are on the move, and you and I were talking earlier. Bitcoin's right back up to that shelf again, kind of a pivot point area. So something to watch right now is, can it bust up through there? Can it really take that out? Because if so, crypto may be getting ready to run again.
Yeah, for the longest time we had a point of control up here at about 96,000. I think it's dropped since that point, but the point of control was about 96,000, which means that like half the trading volume was above it, half was below it, and it was really important when it was lost to the downside, that 96,000. But it's coming right back up there again, and I don't know whether this is going to be the kiss goodbye or whether this is going to break through there and then drive the next swing. It really depends on the institutional involvement that we see. We're seeing a good move on okay volume, not great volume. You're always going to have bigger volume during the sell-offs because of the fear and the panic. But the whole point right now is everybody was expecting the price to drop at this point, and now it's going the opposite way. So good to see that. So I think we're going to find that out, that answer. We'll find out if we do get above 96,000, then I would say time to back up the truck for at least a swing higher. Now, if we pull out to the weekly chart, you can see a little bit more structure on this. So this is, since 23, we've been heading higher, and we've had these regular, pretty deep corrections, and they're getting deeper. But what we have to guard against is this moves up to a lower high. That's going to be the bull trap from hell if that shows up. Very similar to what we went through back in 22. This was a nasty, nasty bull trap that showed up. So this was same thing. This was a higher low, rallied up, everybody bought into it and got taken out to the woodshed. So don't trust this market. set up your price levels, understand where your stops are going to be, understand where you have the edge, and then just follow that ruthlessly. Don't try to predict the future about where this is going.
Gold. Show them the gold chart.
Show them the gold. All right, let's go over here to,
because it is rocking today, and it's holding too. A lot of times, gold on these days will give it back, but just looking at it over here, it's still rocking, for now. So,
yeah, that's gold on a weekly chart. Here's the daily chart. Nice move. Silver is even more. Silver's finally playing catch up. Silver has outpaced gold lately, and we've had some dramatic pullbacks over the last few days. But all they've done is to get people to, try to short this, and they've been squeezed out. So this is not a market that you want to. This is a classic case of I was over here selling calls and got run over, sold more calls, rolled them out, got run over, and finally just said, that's enough. So
well, it also has something to do. That's another thing with Venezuela. Venezuela has a lot of mining and gold deposits and things like that too. So it's a little counterintuitive because it's like, oh, more gold can come on, but it's not so much that. It's the fact that, that means, yes, more gold in the future, not necessarily right now, but it is stability, which is certainty, and markets love certainty, in that sense. And so you're getting a little bit of certainty trade coming in there too.
This is one market that I have not looked at in quite some time, but this is the TLT, and let's look at the TNX for a second here over at the indices. Let's look at the yield here. Okay. So we're running at about, this is rate stability. We've been at very stable rates, right around 4% for quite a while now. So we're not seeing this moving around a lot. Oh, let's see. We got a comment here from Brewhead. That was the margin requirements raise, caused a lot of people to get out. So now it's back to FOMO.
Yeah, there you go. Rates are interesting, right? Because you've got, again, if things proceed with what happened over the last weekend, you've got the oil price will continue to go down, so the costs go down. But it's estimated that there's like $17 to $20 trillion in oil alone in Venezuela. So what could that do for, if we're in control of that as the U.S., what could that do to help our debt, right? So what does that do to rates as well? If you get a dove though, that's really going to cut rates a lot into strength because all things considered, it looks like we're having probably a 3% plus GDP is on tap for the last quarter. So what is that? So cutting rates into that type of strength and stuff. So it'll be interesting to see what happens just with the 10-year and stuff like that. Again, if it looks like the U.S. is less of a risk credit wise, then that 10-year should come down, which would help mortgage rates, help the real estate markets, everything too. So watching how the debt continues to pile up or potentially slows down could be a big thing could be a story of this year for sure when it comes to rates.
Okay, interesting way to start a year. If I recall, last year kind of started out in a very similar way. It was doing okay for a while, and then we kind of ran into a little bit of a roadblock. So wondering if and when we're going to get that in the first quarter. We'll see.
Just my guess on that is when the daily or the weekly chart gets into exhaustion. That's your risk off time to just take some gains and just chill and let it show you what it's going to do. You may get a nice 5 to 8% pullback at that point. Be probably the best entry point of the year, I would say, if that's what we get. So it looks like we got a question on the Qs.
Okay, let's see. We're looking at the Qs here and the November 3 to 4 gap. November 3 to 4 gap. So this is this one right here, I believe. like right around here. So there is an upside gap, and upside gaps, if you look over the last, I don't know, however long you want to, upside gaps on all the indices have been filled. We've got plenty of downside gaps that have never been filled and may never be filled, going back to 2009 and earlier, things like that. But upside gaps, yep, this one's toast eventually. It's just a question of when it's going to happen. Yeah, the positive drift is what's going to do that. So people get all whacked out about gaps and say, oh, gaps must be filled. And I'm like, no, they don't have to be filled, because I've got plenty of them that I've been tracking for the last 20 years that have never been filled and probably never will be filled if positive drift
some of those
continues.
gaps would take a depression to fill at this point.
Oh, even beyond that, it would take it would take devastation. I mean, it would take
80% correction.
right. It would take a dirty bomb hitting New York City. So nobody get any ideas from that, though, please.
Yeah.
Okay. All right. Well, guys, I want to thank everybody for joining us here today. It's a good way to start the new year. Hopefully we can keep this momentum up for at least a few weeks, take some profits, and then see what kind of fun we get into as we get into the end of this month, and maybe a weekly.
One thing to worth note, if you were with us a couple weeks ago before we left, we were talking about stocks with rounded bases that are getting ready to move. Take a look at Roku today, guys. Take a look and see what Roku's doing. It's one of the ones we talked about, a rounded base.
Yep.
So take a look and see what's starting there. Might be something for you to look at over the next few months.
All right.
Cool.
Well, guys, unless anything else happens, we'll see you at the same bet channel, same bet time next Monday, and we'll see what happens.
Welcome to 2026, guys. Happy New Year, and we'll make this one our best year ever.
Yeah. Thanks, everybody. Take care now.